Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time today.
Good afternoon.
Well, the Federal Reserve's next big meeting is coming up the week after next on the 15th and 16th. Chairman Powell's indicated he supports an interest rate hike of 0.25%. There have also been calls for a bigger hike, but there's a lot of uncertainty right now, and so perhaps now's not the time. What do you make of the situation, Mr. Yu?
Yes, if you look at the Fed rate monitor by CME Group, for the time being, as of the March 16th, the chance of raising 25 basis points only is about 93%. 50 basis points rise is only about 7%. So most likely the first time of a rate hike will be only 25 basis points. The question, though, is how fast the Fed might have to raise the interest rate, given the fact that inflation numbers are running quite wild. If you look at the oil prices and the other raw material costs, including the food, seems to be rising quite rapidly due to the war that's happening in between Russia and Ukraine. If you look at the overall supply of the food by these two countries in the various items, also the energy supply are quite significant. Raw materials are also quite significant, so all resulting into quite a bit of price rise. So a lot of people are concerned about the stagflation worries, and if the U.S. needs to tackle this inflationary pressure, people are uncertain about how fast the Fed might have to raise interest rate. But at least for the time being, if you look at the overall CRB index, which is the overall raw materials, the 19 items averaging out, it is rising, but not to the level that the Fed might need to raise interest rate rapidly. If you look at the core inflation, excluding the energy and food, the right is about 6% rise year on year. That number will most likely to come down gradually after this month number. So we are looking at what the Fed might do in the future, but for the time being, 25 basis point is most likely in March.
Well, stocks on Wall Street closed lower overnight on the war in Ukraine, also the possibility of high inflation and higher interest rates. Interesting, though, the main indices are still higher than they were before the war started. What's the story in the global markets?
Yes, if you look at yesterday's market, I think a lot of people are quite uncertain about the overall market because of the inflation pressure. Inflation numbers are running hot because of the oil prices rising so rapidly. And that's the reason why the Dow fell about 0.29%, S&P 500 lost about 0.5%, and NASDAQ composite dropped by 1.56%. Also, during the day, the U.S. stock futures fell quite sharply because of possibility of smoke coming out from the nuclear plant in Ukraine, which is the largest in Europe after Russian troops attacked. But now, if you look at the futures market, it has recovered from -1% to 2% to actually flat number in terms of futures market because Ukraine have said that they secured the power plant. All in all, people are quite uncertain about the whole issue about this war. As long as this war continues, then the price pressure on inflation is going to be continuing, and therefore people will be uncertain about the possible recession that might be happening soon. If the oil price remains to be over $100 to $110 continuously, the chance of the recession happening has risen quite significantly, and we need to see that prices coming down in the future in order for the recession not to happen anytime soon.
Right, and many of the same issues here in Korea at play today. Stocks significantly lower. Foreign investors return to net selling, and part of the worry again, the impact of higher costs for energy and also the nuclear issue that you mentioned. Tell us about the domestic market.
Yes, Kospi was down by 1.22% today. It did close above 2,700 territory, though. Also, Kosdaq was down by about 1.25%, also closed above 900 level. We have said that on a very worst case scenario, fair price for Kospi is well above 2,700 and Kosdaq above 890. It seems that market seems to be stabilizing on that. But nevertheless, we are seeing continuous net selling happening by the foreign investors. Foreigners have net sold about 580 billion won worth of equities of Kospi and also sold about 230 billion won worth of Kosdaq, and also futures market they're selling as well. And if you look at the currency, it did go up to as high as 1,212. Which is the lowest level, or it's the highest level, I guess, in terms of numbers. And a depreciation of the won seems to be happening as the overall the developed markets or the dollars is strengthening while the emerging markets currencies are weakening due to the Russia issues. So we are watching that carefully. However, though, if you look at the overall Korea's export numbers and also the GDP growth rate, it seems to be fairly sustainable for the time being. But we'll be watching the inflation number, particularly the energy prices. As the cost rises, the margins will go down and the economic growth rate could go down in the future. But at least for the time being, it seems that the market seems to be pricing most of the uncertainties right now.
Well, you mentioned the depreciating won, and the exchange rate has risen back above 1,200 since the start of the war. Now the Korean won is at about 12.11 against the U.S. dollar, which is its weakest level since June 2020. The uncertainty right now would seem unlikely to do anything but weaken it further. What's your view of the currency situation?
Right. If you look at the COVID-19 era, Korean won did hit as high as 1296 to dollar in March 20th of 2020. Ever since then, it did fall down to quite significantly and appreciated to as low as below 1100. But since then, has risen quite significantly. Recently, it hit 1212. Clearly, this is because of the dollar strengthening happening. A lot of people are basically piling into the dollars rather than any other emerging markets because of this uncertainty regarding the geopolitical issues. This kind of issue continues, then the Korean won will not be appreciating but rather depreciating. However, though, given the fact that Korea and Taiwan and China are relatively much stronger in terms of the fundamentals on the relative basis of the manufacturing sector, the appreciation might be happening despite this uncertainty that's happening. So I think that given the won has hit above 1,200 level, I don't think that it's going to be depreciating further that significantly, but rather be able to stabilize in the future. As you know, the U.S. Versus Korea interest rate, Korea is higher as they have raised interest rate much faster than U.S., and therefore the foreigners of selling out of the Korean equities or Korea's overall assets is not going to be significant, affecting the currencies to weaken. For the time being, though, volatility is most likely, and we'll watch how things play out in terms of the emerging market currency.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights. We do appreciate it.
Thank you very much.